Welcome to the Deep Dive. It's June 25th, 2025.
Great to be here.
Today, our mission is really to cut through the noise in the global markets. We're going to zero in on India and the U.S.
Yeah, try and pull out what really mattered.
Exactly. Find those surprising connections behind the numbers. Think of it as, your shortcut to understanding why things moved the way they did.
Without all the heavy jargon.
Right. Because today's story, it isn't just about balance sheets, is it? It's more about those big geopolitical shifts, those little signals from central banks.
Things that really set the pace.
Exactly. So, okay, let's unpack this. Let's dive right in and find those aha moments. We'll start our journey in India, a market that was, well, pretty vibrant today.
Yeah, definitely saw some positive action there.
Looking at the headlines for June 25th, India was certainly riding a wave. The Sensex, a major benchmark, closed strong at 82,755.51.
That's up about 700 points, right? Or 0.85%. Pretty solid.
Solid indeed. And the Nifty 50, another key index, wasn't far behind. It ended at 25,244.75.
Up 200 points, so about 0.80%, yeah.
So you look at these numbers. What does this upbeat mood really mean? And I guess what was behind it all today?
Well, it's fascinating because, the overall market being up is one thing, but the stories within it, they tell you more. They often tie back to global stuff.
Okay.
So looking at the Nifty 50, you had some familiar names doing well. Titan, the jewelry and consumer goods giant, up an impressive 3.58%.
Wow. What does that tell us? Consumer confidence.
Generally, yeah. When people feel good, they spend on things like jewelry. Then you had Infosys, the big IT player, up 2.11%.
Suggesting maybe some optimism about tech deals.
Could be signs of deal optimism for sure. Mahindra & Mahindra, the auto company, also gained 2.08%, shows strength in that sector.
Right.
And, you also saw Grasim Industries up around 2%, JSW Steel gaining about 1.8%. So solid stuff in materials too. And here's where it gets really interesting. Not everything was flying high.
Okay.
On the flip side, we saw some surprising losers, especially in a sector you might not expect on a good day.
Which one?
Defense. Bharat Electronics, BEL, a major defense stock, was down almost 3%.
Huh, that's weird.
Right. And other defense names like Bharat Dynamics saw dips too. Now, this seems totally counterintuitive. Why would defense stocks fall?
Yeah, why?
This is your key insight for today. It's directly linked to hopes of a ceasefire in the Middle East.
Ah, okay.
When geopolitical tensions ease, or seem like they might, the perceived need for more defense spending goes down and investors react. Boom.
So global diplomacy hits specific stocks.
Directly. It's a perfect example. We also saw a bit of pressure in banking. Kotak Mahindra Bank down 1.14%. Axis Bank maybe 0.8% lower. So kind of a mixed picture for private banks.
That defense stock example really shows how it's rarely simple, doesn't it?
Exactly.
So to really get a handle on India's strong day, we need to connect those dots. You mentioned the ceasefire. That was the biggest driver.
Undoubtedly. Those reports of potential truce talks between Israel and Iran, they pushed Brent crude oil below $70 a barrel.
Which is huge for India. Massive oil importer.
Yeah, massive. Think about your own budget. If your biggest expense drops, you feel better, right? For India, it cuts their import bill significantly.
And that boosts confidence, what you call risk appetite.
Precisely. Investors feel more comfortable taking risks, putting money into growth assets when that big oil worry eases off.
Okay, what else? Was it just the oil price?
No, another really crucial factor was strong domestic buying. We often focus on foreign investors, but today it was the Indian institutional investors, the DIIs.
The local money.
Exactly. They really stepped up, poured in something like 5,200 crore. That's a lot.
Wow.
That local support acted like a strong foundation, offsetting some foreign money leaving, and just gave the market a solid boost, like the home crowd cheering.
Got it. So even with some global headwinds, wasn't there weak data from China?
Yeah, the China Caixin PMI contracted, 48.3 in May. That did cap gains for some Indian exporters, definitely. But the positive oil news and the strong DII buying, they clearly won the day. And building on that, if you're trying to make sense of this, translating it is key. Like when we say trim extreme rallies for stocks like Titan or M&M.
What does that mean, simply?
It just means think about selling maybe a part of your holding after a big quick jump. You're taking profits, not because the company's bad, but just locking in some gains.
Okay, secure the winnings.
Right. And conversely, add on dips for stocks like Grasim or JSW Steel. That means if you like the company long-term, look to buy a bit more when the price pulls back temporarily.
Accumulating at a better price.
Exactly. Assuming the overall story, like maybe global commodity strength, still holds. For banks, being cautious on Kotak or Axis just means maybe wait and see. Hold off on new money for now.
Why?
We need a clearer picture on their credit outlook, how healthy their loans are and their margin outlook, the profit they make lending. Just wait for more certainty. And finally, defense stocks like BEL. That advice to re-enter. If the ceasefire proves durable, it's logical. If peace holds and the stock chart shows signs of turning around,
A technical turnaround.
yeah, starts trending up again, then it might be a good time to look again, considering their long-term business. It's about reading the signals and the logic behind them.
That's super helpful guidance for navigating what feels like, choppy waters sometimes. Okay, let's shift gears across the globe now to the U.S. markets. Because while India had that strong rally, the U.S. was a bit more nuanced.
Yeah, definitely a mixed bag over there.
The S&P 500 closed today at 6,092.1 cm. Pretty much flat, actually down a tiny 0.01%, but still near record highs.
Right, hovering up there.
The NASDAQ Composite, the tech-heavy one, did manage a gain. Finished at 19,973.55, up 0.3%.
Tech holding up.
But the Dow Jones, more traditional companies, slipped a bit. Closed at 42,982.43, down 0.2%. It's interesting, these different dynamics playing out. What stands out there?
Well, the contrast between sectors is really stark. On the gainer side in the S&P 500, you had some real surprises, but also the usual suspects.
BlackBerry, serious.
Seriously. Surged an amazing 17.4%. Now, we don't have the immediate catalyst right here, but it just shows you there's still some speculative froth out there.
Wild.
Meanwhile, AI optimism kept pushing the leaders. NVIDIA up 2.6%, Microsoft, Apple also seeing gains. Coinbase, the crypto exchange, jumped 2.6% too.
So continued faith in tech and AI.
Clearly, sustained confidence there. But then, the other side of the coin, energy got hammered.
Oh, okay.
Companies like Halliburton down 6.5%, Schlumberger dropped 5.8%, Murphy Oil 5.7%, Devon Energy 4.2%. Big drops for big names.
And why was that? Back to the oil price dip.
Directly, and circles right back. Lower oil prices mean lower revenue, lower profits for these energy service and production companies.
So the same news that helped India hurt these U.S. companies.
Exactly. Fascinating, isn't it? Tesla also saw a notable drop, 4.3%, apparently on weaker sales in Europe, and FedEx was down after missing earnings.
So a mix of global factors and company-specific news.
That's right. It really highlights how different sectors react very differently to the same events.
Incredible how these global threads just weave through everything. Okay, let's unpack the main drivers for the U.S. today. First, that Middle East truce again.
Key factor.
It wasn't just good for India's import bill, it directly hit the U.S. by easing that oil risk premium.
Right. Less tension, less fear about supply disruptions. Price comes down. Crude stabilized near $70.
Which, as you said, good for consumers, good for businesses using fuel, but bad for the energy sector stocks.
Yep, clear headwind there.
Okay, second big piece. We had Fed Chair Jerome Powell testifying.
Yes, that was significant. He signaled data dependency.
Which just means?
Basically, the Fed's going to watch the economic numbers, inflation, jobs, growth like a hawk before they decide on interest rates, no pre-commitments.
Okay, and the market heard that.
Loud and clear. Investors are now pricing in about 60 basis points of rate cuts by year-end.
60 basis points, so 0.60%.
Exactly. And there's roughly a 70% chance priced in for a cut as early as September.
And just to clarify, a rate cut makes borrowing cheaper. Generally good for stocks.
Generally, yes. Cheaper money can boost business investment and consumer spending. And we've got key data coming up too, right? The Q1 GDP revision and the PCE inflation number on Friday.
The Fed watches PCE closely.
Very closely. And yeah, that weak China PMI reading also played a background role, maybe tempering enthusiasm for those U.S. cyclical stocks.
The ones sensitive to the economy.
Right. Okay, so for your learning journey, thinking about actionable insights, when we say scale into leaders like NVIDIA or Microsoft on dips,
What's the thinking there?
it means if you believe in these big tech companies long term, maybe buy shares in smaller amounts when their prices pull back a bit.
Don't go all in at once.
Exactly. Gradually build a position on weaker days, avoid chasing those maybe overvalued names without clear growth paths. Then, underweight energy. Pretty straightforward. Consider having less exposure to oil services right now.
Because of the price weakness.
Yeah, the sector might struggle until oil finds a firmer footing or, geopolitical risk ramps up again. And if you do own them, hedging means looking for ways to protect against more potential losses, like buying insurance, basically, using financial tools.
Yeah.
And tactical travel. That sounds interesting.
Yeah, so this means maybe looking at airlines or cruise lines on dips. Why? Easing tensions often makes people more willing to travel.
Boosts demand.
Right.
But the tactical part is key. It suggests it's more of a short-term idea. Set tight stops, preset price points, where you'd automatically sell to limit losses if the news changes or the stock drops.
Got it. Protect your downside.
Exactly. And finally, monitor Fed minutes. Keep an eye on those detailed notes from the Fed's meetings. They give clues about future rates. Using strategies there is, again, about managing risk when big news drops. If we really connect all these threads, you just see how incredibly intertwined everything is.
Truly global.
That Israel-Iran ceasefire, for example, seems to be holding for now, which is fantastic. It supports stocks globally, but also by keeping oil lower, it really reduces inflation risk from energy costs.
Which affects everyone's wallet.
Absolutely. Imagine if oil spiked again. Prices for everything go up, transport, manufacturing. Conversely, if that ceasefire broke down, you'd likely see a fast risk-off move. Investors selling stocks, running for safety.
Okay.
Then there's monetary policy. The Fed being cautious, data-dependent, that's kept bond yields relatively elevated.
And that explains.
Why sectors like real estate and utilities in the U.S. were weak today, higher bond yields make their dividends look less attractive compared to the safer return from bonds.
Okay. Competition for capital.
Exactly. Meanwhile, India's central bank, the RBI, they'll probably hold rates steady. Lower oil helps keep their inflation in check, so less pressure to hike. We also have to keep China in the picture. That manufacturing slowdown, the PMI at 48.3, that hits global exporters.
Like IT services, commodity companies.
Yes, companies that rely on China buying their stuff. If China's economy slows, its demand for raw materials, for tech, for goods drops. That ripples out. And looking at commodities more broadly, oil down around 6%. Great for consumers. Cheaper gas, cheaper input costs.
But bad for energy stocks, as we saw. Metals, though, they've been sort of buoyed by supply fears easing a bit, but their longer-term path really depends on that China demand picture firming up. And finally, FX and flows. Foreign exchange, capital movements, a soft dollar, a weaker US dollar often helps money flow into emerging markets like India.
Makes investing there more attractive.
And in India, the rupee strength around 85.5 per dollar. It's a double-edged sword.
How so?
It helps Indian companies importing goods, makes them cheaper. Potentially good for consumers buying imported stuff, but it hurts Indian exporters because their goods become more expensive for foreign buyers.
Okay.
And we need to watch for FPI reversals. That's foreign portfolio investors may be starting to sell Indian assets after buying previously. That often signals a shift in global sentiment. It really is just a massive, interconnected puzzle, isn't it?
It truly is.
So, with all that swirling around, what does it mean for tomorrow, June 26th? What should you, our listener, maybe keep an eye on? Well, globally, the big watch items are those Fed minutes coming out Thursday. The detailed notes, they could offer more clues on rates.
Definitely worth watching.
Then Friday, U.S. PCE inflation data, key number for the Fed. And of course, any updates on the Middle East ceasefire. That's paramount.
Absolutely. Any shift there will move markets.
For India, the outlook for tomorrow seems maybe mildly positive, especially if that global risk-on feeling continues.
Depends on that global mood.
Yeah. Keep watching those DII flows that domestic buying is key support. And any comments from the RBI could matter. Technically, for the Nifty 50, support is around 25,200. Think of it as a floor.
And resistance?
Resistance, the ceiling, looks like maybe 25,350 to 25,400. For the U.S., we'll probably see more range-bound trading ahead of those Fed minutes.
Meaning not huge moves either way.
Pretty much. Staying in a relatively narrow band as investors wait for clearer signals. Expect that back and forth, that sector rotation between tech and cyclicals to continue. And for your own actions, maybe keep an eye on overnight futures and Asian cues. What happens in Asia overnight often gives a hint for the US and India Open.
Good leading indicator sometimes.
And maybe keep some hedges, like options or just cash, ready for potential volatility around those data releases. Always good to be prepared. And, well, there you have it, our deep dive into today's global market moves. We've really seen how geopolitical stability or hopes for it and central bank guidance were just the massive themes today.
Absolutely, creating clear winners and, some surprising losers across the board. This dive really showed how just one event, like that potential ceasefire, sends ripples everywhere. Oil prices, defense stocks. It's a powerful reminder of how connected everything is.
It really is.
So, maybe a thought for you listening. As you go about your day, what does this idea of global interconnectedness mean to you? How might it influence, how you read the news, or even just think about the things you buy? Something to mull over.
Absolutely. Thank you so much for joining us on the deep dive today. We hope you feel a little more clued in and maybe a lot more curious.
Hope so.
We'll see you next time.